going to go over a market update to kind of get a beat on what is happening in today's market. That way you can use it with your clients. So what we thought was happening. September 18th, the Fed rate cut equals lower mortgage rates, right? That's what the news told us. That's what a lot of reels on TikTok told us. But is that actually the case? So what is really happening? As you can see here, why mortgage rates are going up despite the Fed's interest rate cut. So the federal funds rate, that's the rate that was cut on September 18th, that rate doesn't actually directly influence mortgage rates. It can a little bit, it can influence it kind of non-directly, but what it really influences is short-term rates. So short-term rates means car loans, credit card payments, bank loans, personal loans, business loans, personal loans. If you go get a money market CD or a money market account in your bank and it's paying you a certain rate, that is what the federal funds rate actually directly influences. It's the rate that banks lend back and forth overnight among themselves. And so it doesn't actually directly influence mortgage rates. So, okay, if we know now that this is not the key factor to mortgage rates, then what does directly affect mortgage rates? How do we know what to pay attention to? So what influences mortgage rates? The market. And the market is a fancy, non-fancy word for a bunch of investors that are legally betting on what's going to happen with the economy. So if the economy is showing strength, people will usually buy stocks. If it is showing softening and people are scared, they call it running to safety. They run to bonds. And when people run to bonds, it makes we don't have to pay them as much interest because now we have more people buying those bonds. It makes interest rates go down. You can kind of think about it like a seller credit, how if you have a bunch of buyers, you don't have to give them a seller credit. If you've got a bunch of buyers in bonds, you don't have to pay them as much interest. So interest rates will start coming down if people are scared the economy's not looking good. That's what influences interest rates to come down. So the market is basically betting and saying, well, what do we think is going to happen? Okay, so what are they looking at? What can we kind of be prepared for to get a gauge on what's happening? There are a lot of economic reports that the market will look at every day, and not even just reports. Sometimes it's anecdotal things like stories that are going on the news or the Federal Reserve saying something that can influence the market. On Thursday, the jobs claim report comes out. So the jobs claim report basically, if a lot of people are claiming unemployment, it's going to show weakening in the jobs market. So people will run to safety, to bonds, interest rates come down. If the jobs claims show that not a lot of people are claiming for unemployment, then they're going to go, oh my gosh, the economy is really strong. Let's go to stocks instead. And it will make interest rates stay the same or it could make it tilt up a little bit. And then on Friday at 7 a.m., we have consumer sentiment, which basically gauges, okay, we have all these reports, but how are people really feeling out there? Are they feeling like the economy is stressed? Or are they feeling like we're in a really good place? So again, if the economy shows softening, it could mean lower interest rates. So that's really, as far as mortgage rates, that's what we're looking for. Now, despite what interest rates are doing, national numbers from the, oh my gosh, I forget what it was from. This is from somewhere. It's somewhere important. It's from one of your guys' websites. So Housing Snapshot, pending home sales, August 2024 shows that month over month on a national level, we are still up 0.6% month over month. So people are still buying houses. The market is still busy. I think people are probably still feeding off of that rate cut that was on the news. People are coming out, they're shopping. I know I'm feeling it. But as we know, the Bay Area is not the same as the national market. It has its little niches in little cities, and one city can be really slow and not moving, while the next city has 25 offers on each house. And so this is why I think this call is so important, because we really can take advantage of the mind share and all share what's going on in different areas where we're shopping right now. Because again, last weekend could be different than this weekend. And so that's why in a few minutes, we're going to turn it over to you guys. And I'm really hoping you guys can share what's happening in your market where you're shopping in different cities and what you're experiencing in live time, opposed to where we've been in weeks before.